Hey kids, welcome back to another episode of the Trades and Gains podcast. I'm your host, Max. We're going to talk about what happened in the markets today because boy, did we have ourselves a day. It was full of highs and a $20 drop in the S&P 500. Now, the only place you're going to find where options flow meets economic chaos and we all pretend to understand what the hell is going on, you'll find it here. Today, we're breaking down Liberation Day, Trump's latest branding masterpiece that sounds like a Call of Duty DLC, but is actually a full-blown trade war again. So here we are, folks. Trump finally dropped the curtain on his tariff spectacle with a 10% baseline duties on everybody. Nobody's exempted from this, by the way. Plus, escalated tariffs up to 46% for his favorite trade villains like Vietnam, China, and the EU. Jesus Christ, this is ridiculous. Life is about to get expensive. This is going to suck. God, I'm not looking forward to it. Auto imports, they weren't safe either. 25% slapped on like a dealer fee at a shady car lot. You know, those like used car lots where it's like, I put $500 down and I'm paying like $650 a month type thing. Yeah, for 78 months. That's very much what that tariff tax is pretty much like. Even beer cans aren't safe at this point, people. The quote of the day was, "It's not fully reciprocity. I could have done that, but I'm feeling generous." Translation, expect retaliation wrapped in maple syrup and Swiss chocolate. Jesus Christ. Effective tariff rate is 25 to 30%, the Great Depression era levels, by the way. We're officially LARPing 1930 with Wi-Fi, though. So, but don't sleep with your cousins, because that's just gross. Now, the markets took that about as well as a Tesla owner getting an oil change. Apple puked up a 7% drop on the day after hours. Why did this happen? Most of your iPhones are still made in China, unfortunately. Vietnam, and production has been moved to India as well. The tariff rates are 34%, 46%, and 26% respectively. RIP to those margins and hello $2,000 iPhones. Tech stocks bled out like a DAO exploit. Amazon, NVDA, Tesla, they all got dragged through the mud and we're no better off than Apple either. So that magnificent 7 is looking like a mediocre 7 at this point. Meanwhile, in the options flow, we had some serious screaming of DEFCON 2 levels. And again, this is our segment that is sponsored by Investor Central Club, our favorite options screener. If you want to get fast, quick, actionable insights into the market action every day, go ahead and sign up for Investor Central Club. You'll most likely make an annual subscription following the flow within your first month. Anyways, moving on, let's see what happened in our options world today. So it looks like SPY led the market as usual with 66 million in total overall flow for today, with 14 million coming into calls. Obviously, when we saw that pump from 552 to 574 of the all-time high today, and 51 million though in puts, with our most frequent contract hit with 3 golden sweeps on it, the 555s that were expiring for tomorrow, and those should open up quite nicely. Let's say they're at 241, so they're probably around 10 or 12 bucks at this point. Anyways, next up we had Amazon, who came in slightly bullish on the day with a $39 million overall flow premium, with 38 million in calls and only 360,000 in puts. So it looks like Amazon is coming in extremely bullish. Someone's brave or on mushrooms here. But those most popular contracts are expiring this week at the 190 level with a $6.90 average fill. We also had QQQ. They were not safe either, with 22.92 million in total overall flow. We had 7 million coming into calls against 15.83 million going into puts. And when we go look at our most popular contract on the day, we're seeing that the 465 April 17th puts are printing, boys. We had 5 total orders that were repeated hits on this ticker as well. Or not ticker, contract, I should say. Tesla, mainly bullish today. There were rumors that Trump said Musk would be stepping down from Doge, apparently. So it was kind of like a buy the rumor type of situation. I know that Printing Tendies, Trendsetters Room, went crazy on Tesla calls. He literally called the level for takeoff, basically, and the room followed and printed. But that most common contract were the 280s that were expiring this week. So someone was definitely betting on this week to do well. Anyways, moving on, our Lady Luck IWM had 21.69 million, much more flow today than we normally see too, with 1.27 million going into calls against 20.24 million into total puts. If anyone's really going to feel the strain of these tariffs, it's going to be IWM. And the companies that make that up, because they're smaller businesses. So these high rates are something that they can't necessarily afford and really mess with their margins and mess with the customer experience, because now it will be much more expensive to get your goods from these smaller companies. Anyways, we had our April 17th 193 puts as our most popular contract, with 6 total hits on the day as well. Now, moving on and looking at our dark pool levels, some notable call sweeps, by the way. We had a $6 million block and an IV crush already in play on VRT. Someone's building a position while the market stares at tech like it's Chernobyl right now. But let's talk about the whale shadows, aka the dark pools, our favorite creepy little weirdos. SPY had $564 million in total dark pool prints today, it looked like. Let's go ahead and, not the SPY, I need the total. So SPY, we had that $564 million print at 4:11 p.m. Size says institutional, timing says we need a drink. TLT was also notable in our flow today with 257 million, or 257 on a golden sweep, but 278 million across multiple orders here. The bond boys are prepping for stagflation or the apocalypse. Take your pick, because whichever's going to come first, that's what they're getting prepared for. We also had Amazon and Apple as our notable, showing sizable blocks despite the sell-off. Someone's trying to catch the machete midair, which is a very risky game. You better have some soft hands. The logic, they know the Fed's going to have to cut once growth tanks. The play here is to front run the panic and buy duration like a treasury-loving gremlin. Now, some other things that happened within the market today. We're talking about GDP growth. It looks like... Did I cover GDP? I did. Atlanta Fed / Q1 estimates to minus 3.7%. Inflation's up, jobs are cooling. Stagflation, yeah. She's not just a risk anymore. She's moved in, changed the Wi-Fi, and is using your toothbrush without telling you. Gross. J&J lost 5% after its talc bankruptcy deal was tossed. That's right, baby. Powder lawsuits still haunting 2025. Who would have thought talc powder would be going through something like this? Meanwhile, Newsmax stock pulled a full meme, plus 180% IPO'd at $10, rallied over to $230. Congrats, your uncle's favorite conspiracy channel is now a billion-dollar business. And the liquor industry's absolutely fuming. Canada yanked American spirits off shelves, making tariffs look polite in comparison. In summary here, we had Trump dodged a global economic hand grenade, or dropped one more so, did not avoid. Markets are wobbling harder than a crypto Dow. And options flow says buy protection or bet on blood here. Dark pools are rotating into bonds and playing defense. And somewhere in Canada, someone's sipping maple whiskey right now while refusing to buy Jack Daniels. Disgusting. If you want to know, or if you want to stay one step ahead of the markets, by the way, while everything burns down in slow motion, go ahead and subscribe, hit the bell, and check the newsletter link in our bio. And remember, when the government says liberation, your portfolio says liquidation. This is another episode of the Trades and Gains podcast. Thank you for attending. I hope you enjoyed my TED Talk. I will see you guys in the next one, and I hope you have a great night.